This program is designed to provide general information with regards to the subject matters covered. This information is given with the understanding that neither the hosts, guests, sponsors, or station are engaged in rendering any specific and personal, medical, financial, legal, counseling, professional service, or any advice. You should seek the services of competent professionals before applying or trying any suggested ideas. Attention individuals, families, and caregivers. It's Medicare Hour and More with Peter right here on K4HD Radio. This is the podcast for all types of insurance solutions while specializing in Medicare because we Medicare. Here's your host, Peter R. Joseph.
Hey, good morning. Hey, we are excited to have you guys join us again. We are on episode 11. We are just cruising along. Got a great show for you guys today. Just to remind you guys, we are live on K4HD Radio. You can download that app. You can also see us on Facebook Live on Joseph Insurance Broker LLC, as well as YouTube. Our channel is at Medicare Minute with Peter. So we hope to see you there. If you have any comments or questions, feel free to chime in. We will respond back quickly. We've had a crazy amount of viewers. I mean, we've had 2,600 viewers already on a couple of our episodes. So, I mean, that's awesome. Thank you so much for your support. And we hope that we've been a great resource for you guys as we navigate this Medicare journey as well as other insurance products. Before I start, I do have to comment. I'm a big sports guy. So, last night, I don't know if you guys are watching the NBA playoffs, but everyone's been wanting the Spurs and the OKC Thunder. What a freaking amazing game. If you guys haven't seen it, you guys got to tune in. It went into double overtime. And if you haven't seen this guy, Victor Wemby, the guy is a freak of nature. The guy's an alien. I mean, I some of the plays that he does, some of the things he does out on the court, it just blows my mind. I mean, I've never seen anything like that. He's going to be dominating for years to come. But yeah, it was an amazing game. So hats off to the Spurs. I have a feeling it's going to be Spurs-Knicks in the finals, and the Spurs are going to win it all. But we'll see what happens. But anyways, enough about sports. We've got a great show for you guys today. Lisa Rehburg is going to be joining us a little bit later on in the show. She's a life insurance settlements broker. We're going to be talking a little bit more about what that actually means and how that could be used for you as a resource. Some very interesting stuff, actually. So, we do offer up life insurance, whole life, term, IULs. We also do annuity rollovers. So this is really up our alley because, a lot of people have these term life insurance policies and it gets too expensive or they feel they just don't need it and they end up walking away from the policy and the policy just becomes deactivated, right? Well, Lisa's going to kind of dive into a little bit deeper on what we could do in those situations. So that'll be exciting stuff. And then we'll have a commercial later on about how to set up small business group benefits. There's a couple of ways that we do it. We do it through Cover California out here, since we are in Southern California. We also do it through another program where there are more options for insurance carriers that your company can access. So We'll walk you through that as well, and we've done quite a few small business group benefits. It saved them a lot of money tax-wise, and we'll share tips on how to do that. And then we'll be going through a PowerPoint. We started a couple weeks ago. It's the Medicare 101 that I do with my current clients as well as my prospects who are turning 65. It's a helpful guide just to walk you through the Medicare journey. So we'll be doing that as well. So a lot on the plate today. I just want to let you guys know our family's going on a summer vacation. We will be gone for 3 weeks. Our show will continue on, though. So our next 2 weeks, we'll have recorded sessions of some important resources for you guys to listen in on. And then the third week, we'll have a replay of one of our shows that got that 2,600 views. So we'll definitely replay that radio show for you guys. So let's carry on and move forward here. So first up, I'm going to show you our PowerPoint. So let me present here. Awesome. Okay. So this is Medicare with Confidence 2026. There's me. Well, yeah, that is me. Like I said, if you've been listening in on our show, I've lost 140 pounds. So I definitely don't look like that anymore. But lo and behold, that's when we started our business. Just a little bit about myself. We've been established back in 2017. So we've been around. It's coming up on 10 years. I can't believe it. Based in Chino Hills, California, which is an hour south of Los Angeles. We're licensed in 32 states. My wife is a social worker. We've got 2 kids, my son age 11 and my daughter age 15. She's finishing up her sophomore year of high school. I can't believe that as well. Time just flies the older you get. So before this, and then we've shared this story over and over again, but just real quick, 22 years experience in the nonprofit sector before this. And again, our show is called MedicareHour and More because we do more than specialize in Medicare. We do health insurance, life insurance, business insurance, liability, earthquake insurance, umbrella, you name it, we do it. We're your one-stop shop. We even do personal auto and home out here in California. So definitely reach out if you need help with those. An ambassador for the Chino Valley Chamber of Commerce. I sit on the board of directors for Rebel Ranch. It's a nonprofit organizations out here. And we've had awards upon awards, which is great. And it's all because of you guys, the clients. So thank you for that. We actually were awarded one of the 50 under 50 by New York City Journal. We've had the Internet Award of Expertise for Chino and Pomona. And then for 3 years running, we've been the best health insurance broker here in the Chino Valley in 2023 and 2024. So again, we're going to quickly dive into the Medicare basics, important terminology, enrollment periods, which we've already touched on. This is hopefully a rehash for you guys. Plan recommendations and cost assistance. So there's the Part A and B coverage. That's what happens when you turn 65 and you get onto Medicare. That's what we all pay into with our paychecks. And then original Medicare eligibility. We'll talk about who's eligible, the cost for Medicare. It is not free. Yes, lo and behold, Medicare is not free. Yes, we pay into it, but we pay into it to keep the costs down, not to make it free. So people are stunned when they're turning 65, get on Medicare, and they call me up and go, I thought Medicare was free. It's not, folks. I'm sorry. And then we'll talk about additional Medicare plan options and how to enroll. So again, the more you know, the easier it'll be to choose the plan that's right for you. So what is Medicare? Well, Medicare is a federal health insurance program. It's run by CMS, which stands for Centers for Medicare and Medicaid Services. It's part of the U.S. Department of Health and Human Services. So just keep these terms in mind. There is the premium, the price you pay, typically on a monthly basis, your deductible, the amount you pay prior to plan coverage, your copays. So every time you visit the doctor or a specialist, you're going to pay an office copay usually. And then coinsurance, the amount you pay for a service. Some of you guys are already familiar with these terms because you're on health insurance for under 65. So original Medicare covers many, but not all healthcare related services. And we've stressed this before in other shows. It does not cover long-term care. So keep that in mind. You want to get on the ball with this when you're around 50, 55 years old, because the older you get, the higher the cost and the more expensive long-term care becomes. It becomes to a place where it might not be affordable for you guys. So please get with an advisor like myself when you're around 50, 55 years old. But we'll talk about what Medicare does cover. So Part A is your free coverage. Everyone's automatically on this when they're eligible. So inpatient hospital stays, skilled nursing facility care, hospice. Yes, hospice is covered, as well as home health care. And again, for most people, there's no premium. For those who don't qualify, you've been like you have a green card, let's say, and you've only been here for a few years, There is a buy-in option. It is pretty pricey, but it's not as expensive as regular health insurance. So you can talk to me about that if that's a situation you find yourself in. So what does Part B cover? Well, Part B is the one where you do pay. Medicare is not free on this part. So it covers doctor visits, outpatient care, home health care, durable medical equipment, some preventative services such as certain vaccines and cancer screenings. Cost is based on income and determined by the Center for Medicare and Medicaid. So for 2026, it should say 2026, this year, the standard Part B premium for most folks is $202. There is an IRMA chart. So based on your income, it could be higher. So for example, if you make over, I think it's $197,000 to about $230,000, your premium is actually going to be $280 per month. So you could see that it's adjusted the more income that you make. They do a 2-year look back. So if you get onto Medicare at age 65, they're going to look at your income at age 63. So if you're making more at that point, they're going to base it off of that. And it's your joint income tax return. It is your adjusted gross income that they look at. But again, it's a 2-year look back. So that premium can be adjusted because let's say in retirement, you're going to be making less than what you did when you were working. Well, Social Security will take a look at that at some point. All right. So qualifications, you have to be 65 or older. If you're under 65, you have to have certain disabilities. You have to be on long-term disability for 24 months consecutively to actually qualify for Medicare. So keep that in mind. If you have end-stage renal disease or have ALS in the first month of diagnosis, you have to be a citizen of the U.S. or a legal resident for at least 5 consecutive years. So remember that you have to be here for 5 consecutive years. All right. So this is how you apply for Medicare. We've talked about this. We're going to show a commercial for you guys next week about how to actually enroll into Medicare Parts A and B. Option 1 is you go to your local Social Security offices. Yes, offices are now open with service hours after, for a long time they've been closed because of COVID. So that is option 1. Option 2 is you apply online. So if you're tech savvy, you're going to create an account at ssa.gov. You're going to do what's called a 2-factor authentication. So you have to have an email address and a cell phone number. So if you don't have both of those, then that's not going to be a good option for you guys. And then option 3, which I highly don't recommend, call Social Security. The reason being is you're going to be on wait for hours on end. They are short-staffed right now. And so I just don't recommend you calling unless you have no other options at that point. All right. And then the number is 1-800-772-1213. Keep that number in mind. All right. So initial enrollment period, this is the 7-month window that allows you to apply for and enroll in Medicare. It's 3 months prior to your 65th birthday. So that's when you need to start getting with an advisor if you haven't already. My recommendation is when you're 64 to start looking for an advisor. And then the month of your 65th birthday and 3 months following. So if you enroll in that window, there is no penalty. All right. If you enroll after, there is a penalty, 10% per year for life. So it's really important that you find when your enrollment period is and you get on the ball to get onto Medicare. Now, there is a special enrollment period if you did not sign up for Parts A and B and you're still on your employer health plan, then that means 8 months after employment or group coverage ends, whichever is first, that's your window. So 8 months if you're working and then retire, 7 months if you are turning 65 and retiring at that point. So keep those windows in mind, a little bit different. Now, the other important thing to keep in mind is COBRA coverage is not credible coverage with Medicare. So if you get COBRA after you retire, that 8-month window starts right then and there. So keep that in mind as well. So you can only keep COBRA for about 7.5 months, okay, without any penalties for Medicare. Now, general enrollment period, if again, You can enroll from January 1st through March 31st each year. And then coverage begins the first of the following month. So if you apply on, let's say, February 15th, your coverage is going to start March 1st. All right. So, and there's examples here. You roll in January, it's going to start February 1st and so on. Now, there's additional healthcare options to assist with extra benefits, prescription drug costs, and out-of-pocket expenses. We're going to talk about that. So here's your consumer choices, all right? So if you look at pathway number 1, when you turn 65, you're going to get onto original Medicare. Part A is free. Part B, you're paying $202 a month. And then PDP is your Part D, as in dog, for your prescriptions. So if you don't get on that, there is a penalty as well. You have to get on that within 63 days. So that's the confusing part for a lot of folks, is that 63 days for Part D, but for Medicare itself, it's a 7-month window. How does that even work? Well, that's why I tell people, just get onto Medicare when you've got that enrollment period. Part D penalty happens a lot for those who are working past 65 and then they retire. What happens is they get onto Medicare, they forget to get onto Part D. They get onto Medicare when their window opens up. Part D, though, is a shorter enrollment window. Again, it's 63 days versus that 8-month window. So my suggestion is always to get with an advisor right away when you come up on that kind of situation, and we can help you through that pathway. Number 2 pathway is original Medicare, which is Parts A and B, plus what's called a Medicare supplement or Medigap and a PDP. We're going to break down, again, why a supplement might be a better option for folks versus an Advantage plan. Supplement, though, you have to pay an extra premium on top of what you're paying for Medicare. The good thing about a supplement is it covers the 20% that Medicare doesn't cover. So Medicare covers 80%. Your supplement comes from behind and covers the rest, the 20%. The only thing you're responsible for on a supplement plan, usually if you're on the highest tier plan, is $280 deductible per year. Once that's met, everything's paid out 100%. So you can see your costs are negligible. I mean, they're very low. But again, you're paying an extra premium for your supplement. So some folks can't afford to do 2 premiums a month. And that premium is usually, when you first start out, about $130, $140 a month. And it increases every year you get older. The last pathway is a Medicare Advantage plan. Members continue to pay the Part B premiums. A lot of Advantage plans, especially out here in California, are $0, and they include your Part D plan. So you're just paying that $202 for Medicare, and that's it. And then you get usually extra benefits like dental, vision, hearing, over-the-counter allowance, transportation, all those. Here's the downfall for Advantage plan. You're in what's called a network. So you're in most likely an HMO or PPO network. You have to get authorizations. You could get denials for certain authorizations. So that's the detriment of a Medicare Advantage plan. All right, and then prescription drug plans, they have specific lists of covered drugs. They're sold by private insurance companies. They have monthly premiums. They're tiered copays. You can enroll, again, in a standalone Part D plan, or you could have it included in the Medicare Advantage plan, all right? Okay. So Medicare supplements, over 14 million Americans are on a supplement. The help covers costs, services not covered. Out-of-pocket costs can include copays, deductibles, and coinsurance. Plan types are standardized, identified by letters of the alphabet. So you've got F, G, N as in Nancy, A as in Apple. So we'll talk about that in another time, because I don't want to go into details and confuse all of you. But those are the supplement plans that you hear about, those letters, all right? They're sold by private insurance companies. Premiums vary by state and plan. They can require underwriting. So when you're turning 65 or you're first eligible for Medicare, there is no underwriting. You're guaranteed in. However, if you start with a Medicare Advantage plan and decide you want to go to a supplement at some point, then you have to go through underwriting, and they're going to pull your medical records, which means there is a chance you could be denied for it. So my recommendation to my clients is if you want to get onto a supplement plan, then the best way to do that is actually is to basically get onto it right away and try it out for a year or two. And then if you feel like you're not using it as much as you should, then that's where you go to a Medicare Advantage plan. So that's a better opportunity, better pathway per se, if you want to try a supplement plan and they're not going to pull your medical records. All right. And then covers Parts A and B benefits. This is the Part C Advantage plan. It includes Medicare Advantage only. It can also include your Part D. Monthly premiums vary by plan. Like I said, out here in Southern California, majority of plans are $0. Generally have a network of doctors and hospitals. They're sold by private insurance companies, typically guaranteed issue. They're not going to look at pre-existing conditions. You either have to have an Advantage plan or supplement. You can't have both. So just keep that in mind. You have to be in Parts A and B to be eligible. All right. So again, 7-month window. That's that initial when you're turning 65. Special enrollment is year round. Special enrollment includes, FEMA disaster responses. So let's say a hurricane happens or a big storm out here in California, then you can actually enroll at that time into Medicare Advantage. The other special enrollments would be if you move out of state, if a situation happens where you've got diabetes or chronic health condition like lung disease or heart disease, that's also a special enrollment period. And then annual election period is October 15th through December 7th. Open enrollment period is January 1st to March 31st. So there's so many different enrollment periods. This is another reason why you should get with an expert like myself, just because you want to get walked through and make sure when those enrollment periods come up that you're able to review your plan with your advisor, that you know when to enroll and when to switch your plans. All right. We've already talked about this. It's just a rehash. Again, these are the special reasons. Remember, COBRA and retiree health plans are not considered credible medical coverage. When this coverage ends, you may incur late enrollment period. So remember, when you're on COBRA, that window starts, okay? All right, again, just an overview. We've covered this in other radio shows, but January 1st through March 31st, you can switch to a different Medicare Advantage plan or disenroll from a Medicare Advantage plan, switch back to original Medicare and enroll in a Part D plan. So that's another open enrollment period for you guys. There are cost assistance. There's extra help. It's called Low Income Subsidy, LIS. Again, if you don't qualify for Medi-Cal or Medicaid, you might still qualify for prescription drug help. So again, this is why you want to get with an expert to see if you fall in that window. It's very easy to apply for it, and it's free. It doesn't cost you anything. You'll just get an approval or denial in the mail. Again, there is Medi-Cal out here in Southern California, or Medicaid. You do have to be about a $19,000 single gross income for the year or below that to qualify. There is a lot of paperwork, and it does take a long time to process. I will have you keep that in mind as well. All right. And then there are Medicare savings programs for all-inclusive care for elderly programs. They're called PACE. And PACE actually can go for people age 55 or older. So that's an option as well. So when you choose a plan, you're going to get with an expert like myself, and we're going to go over your budget, your doctors, your drug costs, your frequency of care, your likes and dislikes, travel habits, and what's important to you benefit-wise. All right. And then this is where, obviously I ask Q&As with my prospects. So I show this slideshow to, again, my current clients, people looking to enroll into Medicare. So they're called prospects, people who are at assisted living centers or senior centers. We do this presentation, and then we have a Q&A at the end. So I know I went through that really, really fast. Again, this is recorded. It's live. We'll be on Apple Podcasts, so you can re-listen to all this. But again, we also have this Medicare 101 webinar that you can sign up for on our website, josephinsurancebroker.com. We go through this a lot slower, I promise. And, we can walk you through each of the parts. We can stop, have you, ask questions, and we can answer them right on the spot. So if you want to sign up for a seminar, please just go to our site, and it is in big blue. You just click that button, put in your information, and schedule a time with me to walk through the seminar. All right. I will be right back. I'm going to grab something real quick. Give me 1 sec. Just grabbing my questions. Insurance settlement broker. And let me exit out of this. There we go. All right. All right. Lisa, are you there?
Sure. I'm right here.
Hey, how are you?
I'm doing good. Thank you.
I'm so glad to have you on our show. We appreciate you making the time for us this morning. Why don't you just give us a little background of yourself, where you're located, and how you got into this business?
Yeah. So my name's Lisa Rehburg. The company's Rehburg Life Insurance Settlements. And I have been in the insurance industry, gosh, I'm going to have to admit this, over 35 years.
Wow.
Yep. Just focused on life settlements for the last 10 years. And it's awesome because we are another way for clients to receive money and more money for their life insurance policies than just walking away from them with zero.
Okay. Well, we're going to get into that. I did briefly share with my audience about that. Obviously, our brokerage offers life insurance. And so this is key for them because we do run into situations a lot where people walk away. And so we're going to talk about that. So what is basically a life insurance settlement? Let's start there.
Yep. It's just a financial transaction. So think about it like selling your car. Your life insurance policy is an asset that people own, and they don't realize it. Any life insurance policy, including term policies. And so this is going to parallel selling a car. When you sell a car, which is another asset, you receive a lump sum of money and you sign the pink slip of the car over to the buyer, and the buyer walks away with it, right? It's very similar. Clients receive a lump sum of money. They're going to sign the pink slip of their life insurance policy, a change of ownership form to the buyer. The buyer's taking over the policy. They're making the premium payments, and they're making themselves the beneficiary. So the client is still insured now with a lump sum of money. But for the buyer, which tends to be institutional money, by the way, it's an investment. It's pure numbers for them. So they're important because without them, we can't help clients, but we're on team client.
Okay. And then, so what kind of policies are we talking about? Are we talking about term, IULs, all of it?
Yes. Yeah, all of it.
Okay.
Here's what we see most often, though. We see universal life policies a lot. And the reason for that is as we get older, the cost of insurance goes up. Most people think I buy this universal life policy and I pay $100 a month or whatever it is forever. And that's not true. It accumulates cash, as you well know. But over time, if the client is still paying $100 a month, but the cost of insurance is $500 a month, $400 a month is going to come out of that. So we see clients all the time that have little cash or no cash, and they have to put more money into the policy, and they either don't want to or can't. And so that's our number one seller, if you will. And the second is term policies. Actually, especially if they're still convertible to permanent policies. Whole life we do sell. They're just a little bit tougher because they tend to hold a lot of cash, and the premiums tend to be more expensive, but still doable.
Now, does the term life have to be convertible, or can it just be a regular term life?
Yet typically, most term policies are convertible to permanent policies at some point in time, right, during the term period. And convertible means you can convert it to a permanent policy, like universal life or whole life with no health questions. And that's really important. So 98% of the time, the policy does need to be convertible still, but doing math, being the finance major I am, right, 2 to 3% of the time, 2 to 3% of the time, we can still sell non-convertible term policies.
Okay, good to know. And then let's start with what can people do with the money that they would get from this settlement?
Yeah, it's awesome. So like you sell your car, you can do anything with the money you want, right? Same thing with the house, do anything with the money you want. It's the same thing. So clients can pay for long-term care expenses or buy long-term care insurance from you, Peter, or,
Okay.
maybe invest that in an annuity or pay down their house. Or we had a client got funded. He called me on Saturday morning. He got funded on Friday night. And he's like, we're paying off the car on Monday. Yeah, going around the world cruise. Doesn't matter. There's absolutely no restrictions.
Okay. And then, so we know that there's tax benefits to having life insurance, right? And so the death benefit isn't taxed. So in this case, if you get a settlement, is that taxed?
It's a good question. And here's my caveat. I'm not a CPA or a tax professional
No.
to give
Okay.
tax advice, right? You know that caveat, but here's the answer to the question. Think about this once again like an asset. So the premiums that a client has put into the policy from the beginning of the policy, the very beginning, that is a basis. It's what they've paid for this asset. So if the settlement money is underneath that amount, and many times it is, there should be no tax on it because they're getting less back than what they paid into it. Over that amount, I'm going to use the word typically, is typically long-term capital gains. So up to that basis should be not taxed. Over that's typically long-term capital gains. And I don't want to get too wonky. There could be if there's a gain inside the policy, that little corridor could be ordinary income. But typically not taxed long-term capital gains.
Okay. And then let's say, because we've got clients listening in, I'm sure. So if my clients have something where they want to walk away, what's their first step?
The first step's to call you, right? And have the conversation about the policy, because I look at us as the last stop on the bus line. And the reason I say that is clients have already had conversations with their advisors like you that have talked about, can I reduce the face amount to reduce my premium? Are there other 1035 exchange? Are there other options for the policy to do what the client needs it to do? But once it becomes apparent to you and the client that the policy is not wanted, not needed, or they want to repurpose it into making their life more comfortable, like maybe paying for assisted living or home care or whatever. Bottom line is, once we get to that point, that's where we come in. We're here to get clients more money than just lapsing or surrendering. Okay,
that makes sense. So you guys heard it here. You call me first, and then we'll get your ball rolling. So are there certain age ranges or health situations that make someone more likely to qualify?
Yeah. So think about us like opposite regular life insurance world, like literally completely opposite, turn it upside down. And that's our world. The buyers, bluntly, are not looking for their investment to pay off in 40 years. So if someone's 33 years old and running marathons, we are not going to be the best solution. The older somebody is, the more health impairment somebody has, actually the better, the more valuable their policy is. The shorter that life expectancy is, the more valuable the policy is, because once again, bluntly, the investors believe they're going to get their payoff sooner. So there's not an age guideline, if you will. It's a combination of age and health. We do have clients in their 50s. They have significant health issues. If someone's in their 80s, they can be pretty healthy. So it just depends. The buyers are looking for clients, bluntly, with 10 to 15 years, sometimes 20 years of life expectancy or less.
Okay, good to know. And then, we talked about what people can do with the money. How much money are we talking about in certain situations? I mean, can some policies actually be worth quite a bit?
They can. And I love the opportunity to be here to raise visibility, because so many people will just walk away from their policies because they don't know there's an option. Here's the answer to your question. The short answer is it depends. It depends upon a client's policy, because no two $100,000 term policies are the same. No $200,000 and $100,000 of face value or death benefit or higher is typically what we're looking for.
Okay.
No $200,000 universal life policies are the same. The clients, two 76-year-olds can be completely different from a life expectancy perspective. But here's the answer to your question. Literally, policies can be worth tens of thousands or hundreds of thousands of dollars, once again, from an asset that the client's going to walk away from with little or nothing.
Wow. Okay. Okay. All right. So we're gonna end our session today with just rapid fire questions. You can just answer them best you want, and then we'll finish things out. Just to let our audience know, Lisa's gonna be back on a couple more times. So this is a lot of helpful information. Thank you so much for sharing this, Lisa.
My pleasure.
All right. First question: most surprising thing people learn about life settlements?
They are legal and highly regulated by departments of insurance across the country. And I'm going to qualify that too by saying most people have no idea this exists. So I should probably say that it exists to start with.
Okay. No, that's great. That's great. Okay. Keep it, surrender it, or explore selling it. What should people do first?
They should talk about, they should do explore selling it. Bottom line.
Okay.
Sorry. They should explore selling it, because worst case scenario is if we don't sell it, maybe the buyers don't have any offers for a client, then at least they know what the best solution is and they have all the information to make the best decision for them and their family.
Okay, perfect. One reason a policy owner should pause before letting a policy lapse.
Yeah. Ask yourself, do you need this policy, right? Okay. And second of all, if a policy lapses, there's no asset to sell. So please do not let a policy lapse or surrender before you talk to you, Peter, about a life settlement.
Okay. One myth about selling a life insurance policy that needs to disappear.
There's a lot of, these are good questions. There's a lot of compliance in our market. Beneficiaries must sign off, and a client's doctor must sign that they're of sound mind to complete the transaction. So many people think, oh, this is only for people that are in their 80s or 90s. That's not true. And that, oh, this is unregulated. And there's a ton of compliance in our market for all the right reasons.
Okay. Wow. All right. Most meaningful use of settlement money you've seen in your experience.
Oh, wow. I've seen clients use it to fund long-term care. They're in assisted living, they're running out of money, or maybe the long-term care policy isn't covering everything, whatever it is. So they've repurposed the money into making their life more comfortable.
That's great. That's great. And then one word you want people to associate with life settlements. Just one word.
Money.
All right. That's awesome. Well, Lisa, you've already taught me so much about life settlements, and our clients definitely appreciate this information. Again, if you guys are interested in learning more about this, heed Lisa's advice. Do not let your policy lapse before talking to me, and then we will advise you on what the best thing is to do. All right. All right, Lisa, thank you so much for your time. We appreciate you. We hope you have a wonderful week. And we'll see you again in a couple months.
Sounds great. Thank you so much, Peter. Have a great day.
You're welcome. You too. Bye-bye.
Bye.
That was awesome. Wow, that is some great information, stuff that I didn't even know about until now. And so, we have a lot of our clients that we service term policies that are convertible and universal life policies. So again, if you're older and you're looking to get some cash for a certain reason, especially if it comes to long-term care, assisted living, please reach out to me. My number is 909-217-2630. We can get you on our calendar and definitely walk you through that process. All right, so I am going to try to show a video. So give me 1 second here. So this is going to be a commercial, and we're going to talk more in length about this next radio show. But this is a commercial to walk you through how Cover California can set up your small business group benefits for you. If you have employees of 2 up to 100 employees, and there are tax benefits to this. So let's go ahead and see if this will work. Oh, it's not working. Oh, let me see why. Okay, so I've got the video in. Oh, You see it? Is it playing? Okay. All right. There we go.
Today, Californians have improved access to something they truly deserve, healthcare. And Covered California for Small Business is uniquely designed to help you provide affordable health insurance to your employees while staying within your budget. The laws are changing to offer healthcare coverage to even more small businesses. Find out how they impact your business and if you qualify by contacting a Covered California certified insurance agent. It's free, and you can meet with them in person to help you determine your eligibility and to find an option that best fits your needs. Your agent is your direct link to all the answers. They will walk you through the process and provide multiple solutions to help you make those important decisions. Your agent can tell you if you qualify for small group insurance through Covered California, what your choices are, and if there are federal tax credits available to you. That's right. You could actually save money on your health insurance costs, but it's only available if you enroll through Covered California. If you are self-employed without any employees, or if your business is run only by family members, your agent can also tell you about individual plans available through Covered California. It's easy to find a certified Covered California insurance agent for free in-person assistance to walk you through the enrollment process. Visit coveredca.com/for-small-business or call Covered California for Small Business. We're here to help.
All right. That was awesome. I'm starting to learn more about our radio show and what I can and can't do. So thank you all for bearing with me. But again, you want to call me directly and don't call that number. We are certified Covered California agency. We've set up clients before with small business group benefits through Covered California. Again, there is another program that will offer a little bit more insurance carriers than Covered California does. But you do get tax breaks on those health premiums. Just keep in mind that you do have to pay at least 50% of your employee premium if you set up these benefits for your employees. You can actually cover up to 100%, but the minimum is 50%. And so it might be a cheaper way, especially if you're a smaller business with just a couple employees versus just getting your own family plan. If you're a family that owns a business and have just a couple employees, it just makes more sense to set up group benefits because you're going to save exponentially more on those taxes versus just having a private health insurance plan yourself. All right, so please reach out to me. We can walk you through that. Again, josephinsurancebroker.com is our website, and you can find more information about that on our site. And we'll dive a little bit deeper into the benefits and the negatives of setting up small group benefits on our next show. I did pull up, because I did go through that power presentation pretty fast, but I did pull up the IRMA chart for this year. So I just want you to hear this. If you are filing jointly or single, so single is $109,000 or less, you'll be paying that $202 a month for Part B for Medicare. If you're making a joint $218K or less, you're paying that $202. Anything above $218 all the way up to $274,000 for joint, you're going to be paying $284 a month on Part B. And then Part D, you're going to pay an additional $14 a month. If you are single and you're making $109,000 through $137,000, you would be paying that $284 a month and $1,450 again. And then the next level, I'll just go up for the next two, and I'll have this sheet available for you guys in our presentation if you ever sign up for a webinar. But again, if you're making $274,000 through $342,000 joint, then your Part B jumps up to $405 a month. So you could see it is significant. Your Part D will be $37 a month. If you're single and you make $137K up to $171K, then you will be also paying that $405 a month as well, that $37 for Part D as in dog for prescriptions. And then the last one I'm going to do is if you are making $342,000 up until $410,000 per year joint, you will be paying $527 a month for Part B and $60 a month for Part D. If you are single and you're making $171K up to $205,000K, then you are paying that $527 a month and $60 Part D. So the more money you make, obviously the more costly your premium becomes on your Part B as well as your Part D plan. So keep that in mind. It's still probably going to be cheaper than being on a traditional private health insurance plan because a lot of those costs are covered. Hospitalizations are covered through even the Medicare Advantage plan out here in Southern California. So it's just that premium that you would be responsible for. And remember, if you're married and you're both turning 65, you each pay that premium. It's not just one premium for the couple. So also keep that in mind. All right. Well, we are starting to close down our show. Again, I hope you found a lot of information on our show helpful. I'd like to give a shout out to a lot of our sponsors. We've got quite a few. Lisa Rehburg is one of our sponsors now. We also have Everything Senior Insurance. They are a marketing organization that helps agents get the Medicare contracts and get the resources to build their businesses. Lead Heroes is a lead source company. That's another sponsor of ours. John Aligna, realtor out here in Southern California is another sponsor. So we couldn't do these shows without our sponsors. We thank them so much for their support. You can find them on our past episodes. Again, we are on Apple Podcasts. We are also at YouTube Live at Medicare Minute with Peter. And we're on Facebook Live, Joseph Insurance Broker LLC. So we thank Lisa so much for shedding light on our financial option. Many people probably have not even ever considered in their lifetime. And to our listeners, sometimes the policies and plans you already own may hold more value and opportunity than you realize. So at Joseph Insurance Broker LLC, we're proud to connect with professionals and small businesses that help educate and empower our communities. This is Medicare Hour and More with Peter. We will see you next time. Remember, I'm on that RV trip for 3 weeks. So, but we will have recorded shows for you guys with new content. Excited to push that out for the next 3 weeks. But keep us in your thoughts for safe travels. And we're glad that you've joined us this morning because we Medicare.
Thanks for listening. Tune into Medicare Hour and More with Peter every Tuesday at 9 a.m. Pacific Time right here on K4HD Radio at k4hd.com for more real-life stories from experts who Medicare about you and protecting your health, your finances, and your future. See you next week.